All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Today I'm going to talk about some crypto news, and as usual, talk about the price before I get into all that. So, from my stream last night, this is for you, the Uber driver who just listens while you're driving around and making some money. So, there's that. I'm also taking some time out of my day from watching Silence of the Lambs, which is just such a compelling movie every time you watch it, and it's so hard to remove yourself from that movie. Anyway, so what we're seeing today with the price of Bitcoin, for those of you that are watching, you can see a huge downswing, if you will, of the price. Just about an hour and a half ago, maybe an hour and 15 minutes ago, we were at 89.47. We'll call it 89.50 even. And now we are down to about 8,664. So $1,300 loss in about an hour and a half, and it was actually even lower than that at more of a $1,400 loss that it shadowed to at its lowest point. So, as usual, just because the price goes up doesn't mean it's going to go back down. And if you look at the hour chart, you can see in just an hour's time it went down there, and one huge red candle from the quick sell-off. But that kind of makes sense because, as you can see earlier in yesterday, there was a huge buy-off that raised it from $8,655 all the way up to $8,931 in the manner of an hour. So this could be whale activity, just buying and then waiting for the price to settle a little bit and then selling all of it once again. But again, the crypto market not doing particularly hot right now. So moving on from that, we'll check out good old coin market cap. And you can see most of the coins are down. Some of the top 10 are still up, though. We can see Ripple is up, Cardano, Stellar, IOTA is up, even Dash is up just a little bit there. Tron is actually surprisingly high today. So we'll check out the winner of the day is Metal Coin. It's up 23.63%. The second highest is Tron at 21.24. And let's check the loser of the day. Storm is the loser of the day, and that is not particularly surprising because if you checked the prices of coins yesterday, Storm was up by over 150%. So I headed over to the Reddit, and for some reason, everybody on the Storm Coin Reddit did not seem to realize that that was just going to be a pump and dump. I think they were maybe just being positive about the whole situation. Everyone was saying, hodl, hodl, hodl. This is going, this coin's going to be big. The thing is that I've never heard of Storm Coin, and basically nobody else has ever heard of Storm Coin. So let me show you that as a visualization here. You can see this is the pump that brought it up over 150% yesterday, and boom, and we're on our way down already. So this is not organic growth, people. If you see this, this is not organic growth. For anybody that was holding down here at, 2 cents and then sold it at 7 or 8 cents when it got to its highest, well, congratulations to you. You just made yourself a lot of money. But for the most part, this is not organic growth. Whenever you see this, it's bound to just dive again. So when these new coins pop up on the market, sort of come out of nowhere, Storm's been around for a little while now, but it is just now starting a pump. There looks like a pump back in January too. So if we go back there, that's when it initially started. The pump made it go all the way up to about 24 cents. It fell all the way back down to less than 2 cents. And then yesterday's 150% pump. So a lot of these are, there's like Discord pump and dumps. There are Telegram group pump and dumps where they just pump one coin to the other. My advice to you guys is do not follow those. Don't follow those, because here's the thing. When you see an announcement of a pump and dump, that announcement was way too late. When it says, hey, we're all buying now, the people that coordinated that pump bought days before that at the lowest point, and then they announced it. And when it went up to its highest, and when they announced to sell it, they've already sold their coin. And so the majority of people will lose because somebody had to buy it. For example, in this chart, somebody had to buy it 20 cents there to make it 20 cents. Somebody had to buy it 19 cents, and to make it 24 cents. And so all those people that are stuck at 20 cents will likely never see 20 cents again. And so that's not good. That's not good for the developer's coin. You're basically just toying with a bunch of developers' work, and the majority of people are going to lose the money. So they're scams. Also, pump and dumps are actually illegal in the stock market. So, but in an unregulated market like the crypto world, it's not really illegal because it's completely unregulated, but still quite looked down upon. So now moving on to some news. The hype is being sucked out of the crypto market. So this is a short one. The hits keep coming on Google to move ban from AdWords to ban ads essentially from AdWords. The move comes at a particularly sensitive time for the sector as regulatory concerns and a crackdown in Asia have taken a toll on investor sentiment. And the sound you're hearing is the sound of the hype being sucked out of the market. As a consumer, trends evolve. As our methods to protect the open web get better, so do online scams. Improving the ads experience across the web, whether that's removing harmful ads or intrusive ads, will continue to be a top priority for us. So that was the director of project management at Google. And so after months of regulatory hearings, multi-million-dollar hacks, government crackdowns, bans, and other assorted bloopers, Google joined Facebook in putting a fork into the speculative frenzy surrounding all things crypto. So, you know, if you think to yourself that crypto is unable to be touched because it's decentralized and not a part of the government, you would be dead wrong in that statement, because there are plenty of ways for corporations and the government to make small little attacks on crypto over and over and over that will reduce the price. I've heard of crazy conspiracy theories that don't really have any backing, but I wouldn't be surprised if they were true, that the CIA created crypto and that the NSA is watching everybody's crypto transactions, this, that, and the other thing. So trust me, it's not as safe as you would suspect it to be. While I do like crypto and I'm not trying to bash crypto, it's just it's not in its own little safe bubble. Trust me. So are we witnessing the death of crypto hype? Is crypto hype gone? Bitcoin and other cryptocurrencies have seen a drastic decline in value over the past few months, both in terms of trade volume on all major exchanges, transaction volume, and the overall interest in both traditional media and social media sources. This recent downtrend has left people wondering if this is the end of cryptos or just another yearly dip after a parabolic bull run. So I can attest to the media and social media sources because it's not on TV as much. It's not on Bloomberg and Fox Business and things like that. It used to be mentioned basically twice, 3 times a week on those channels. And so in terms of social media sources, I can attest to that personally because basically views. I can see everything. As a YouTuber, you can see all kinds of analytics. You can see subscribers. You can see where they subscribe from, geography. You can see what videos were shared, where they were shared, either whether it would be Facebook or copy to your clipboard when you're copying it, you know, the link on a cell phone. You know, I can see where they're shared to. I can see all sorts of things. And basically all analytics are way, way down. Now, this could be a number of things. Don't get me wrong here. I mean, maybe people just don't like me. Maybe my content lately sucks. There's so many other factors that you can put in to that sort of thing. However, my content really hasn't changed all that much, essentially. And it's just essentially that now that crypto isn't in the tens of thousands, nobody is talking about it at work. Nobody's saying, hey, oh, look, it's 16,000. Look, it's 18,000. Look, it's 20,000. And that raised a lot of interest and FOMO. So here's another thing that I noticed. Now, mind you, my channel is as little shilly as possible. There are a few things that I do promote, things that I believe in. For example, the Coinbase referral link. So people sign up on Coinbase. When they buy $100 worth of crypto, they get $10. I get $10 of Bitcoin. Everybody can have that link. If you make your own Coinbase account, you don't have to be anybody special. You have that link. Everybody has that link. Okay, so it's a great deal because both people get the same thing. So here's the thing. So I notice how many people are actually taking that link, and it has drastically decreased, which is, in my opinion, somewhat backwards and nonsensical. Now, I'm not saying I want to force everybody to take that link. Obviously not, right? But that just goes to show how the decline of social media in terms of crypto interest people should be buying more now when the price is low than when they were buying at $15,000, $16,000, $17,000 plus in Bitcoin. When it was $16,000 or more, those links would be taken quite often. My views were much higher. Even people like Trevon James was saying that basically crypto YouTube channels are pretty much dying off, and that the views are getting less and less and less, and the the engagements less and less, the shares less and less. And this is true. Now, I understand on Trevon's part that, he was basically called out for the internet being one of the most hated people in the internet for his 15 minutes of fame, which makes sense. But really what he says is ringing true. I'd say one of the only people that is growing in terms of YouTube crypto channels, one is myself, but it's actually slowed down dramatically, probably hundreds of percent less. I don't know if that's even physically possible because it can't be 100% less, but high percentage less than what it was. I'd say one of the people that are growing exponentially is Doug Polk Crypto, and I can't stand Doug Polk Crypto because I'm not going to listen to somebody who is a gambling addict in terms of investing, and all he does is just basically only drama videos. And because I've checked out some of his videos and they teach you nothing, absolutely nothing. It's not news, it's just drama. And I don't take investment advice from a gambling addict. The market capitalization of the cryptocurrency market has taken more than half since all its all-time highs. This trend is mirrored by the Bitcoin price chart. At its peak, Bitcoin hit $19,869. I usually just call it 20,000. Why not? Before briefly crashing to a third of that all-time high to 6,320. And I remember it actually getting like 5,800, shadowing on Cheatax and such. And the rapid dip was a major wake-up call for everyone in the crypto space, reminding investors that the high reward comes with high risks, such a volatile and still nascent market. So the graph of Bitcoin's daily transactions and unique addresses gives us a glimpse into usage and adoption of the cryptocurrency, a proxy indicator of how many people are interacting with the new technology. The decline in both these charts is on par with the price of Bitcoin. So you can see the transaction super high when it was at its max, and nothing but a rise until that max, and then with the decline of it, nothing but a decline. And so this was approximately the max price. It's a little off, but and then down to where we are today, which is really, really low. And then Bitcoin, and then we also have some daily transactions here going up, all the way down. Some media analytics highlight the crypto hype plummet. The same trend can be found on crypto wallet websites like ours and others. The decline in article view counts spanning crypto news outlets is evident, as their monthly visitor count, which has stopped growing and it is in a slight downtrend based on Alexa rankings. Additionally, social media interest in Bitcoin and other cryptocurrencies is beginning to decline. On Reddit, the Bitcoin and cryptocurrency subreddit subscriber growth has plummeted. Views and subscribers on YouTube has been significantly affected. Engagement and searches for Google Trends show an obvious decline in interest. The trend graph shows the interest over time for people that search for the term Bitcoin. This graph reflects it, as does the price of Bitcoin. So going on up, then going on down. So this is evidence that most people only care about price rather than the technology. The sideways trading action of the market over the past few months has led many observers to become bored with only minor double-digit movements, and even less with people interacting than before. So where do we go from here? If you think back a month to the month of December, all the variables capable of demonstrating the rise or fall of Bitcoin seem to align in favor of the former. Collection conditions were primed to instigate the massive spike in the cryptocurrency, leaving many feeling like their money was printing itself in front of their own eyes. After the Chinese ban of exchanges in September, Bitcoin started climbing at a rapid pace, breaking through the $1,000 barriers with apparent ease. By the end of November, and significantly Thanksgiving weekend in the USA, everyone had heard of the parabolic inflation of the Bitcoin's price. It was all over social media, traditional media, state television, news outlets, all over the internet. So, this just proves my point even more. I talk about this sometimes in my live streams about how the The Bitcoin, here's what Bitcoin happened, and I don't mean to be harsh, but this is the reality. Bitcoin brought the gaming, television, low attention span community. It brought kids and young teens. It brought 23-something-year-old people into the investment world. The investment world prior to crypto was a long-term investment sort of situation. With investing before, you were lucky to make 10% of your profit through the year. And that was a good year for you. All right. And so most people would say, screw that, because I can turn $1,000 into $1,100. Like, why would I want to wait a whole year to do that? But normally the investment world was something that you invest in on a yearly basis, something like a 401k, IRA, and you just keep putting money in and money in and money in over the course of 20, 30, 40 years, and then you retire with it. When crypto came along, I'm a gamer, I have a gaming PC, I can just start mining crypto. And they see that the gains go up and down hundreds of dollars, and then they buy in. When Bitcoin was at $16,000, $17,000, as you can see, the interest over time here, searching the word Bitcoin and transactions, were at an all-time high. Well, that's all said and good, but that means people are buying at the all-time high of Bitcoin. And now that the price of Bitcoin has dropped, people don't want to buy when this is the best time to be buying. So the Bitcoin world brought people who never should have been investors in the first place. People who should never have been day trading in the first place. And every single video I make on day trading, investing, and things like that, I try to give advice to people to look at all things positively. If the price is going up, great, because then now you're worth more. If the price is going down, just wait and buy some more, because now you can buy twice the amount with the same amount of money now that it's half the price. Excellent. That's a great deal normally, because if you're driving down the street and normally a Whopper is $6 at your Burger King, and you're driving down the street, that makes you want to go in and buy it, right? Okay, sure. So now that the Whopper is half price, nobody cares about it. That doesn't make any sense. So again, it's just people who wanted to make money right now, now, within days or weeks, and they wanted to see their money just increase hundredfold immediately. They had no patience. And the people that wanted to invest into all these altcoins and throw thousands of dollars into some altcoin that's worth a fraction of a penny so that they can hope that it will go to the moon, and will be very disappointed by the fact that it won't. So, again, crypto just brought in a lot of people that aren't investors, plain and simple. There's just no other way to put it. It brought in a lot of impatient, young-minded people. So, it is what it is. So you guys remember the Game of Thrones Bitcoin hacker? The one that took all of the episodes and then released them on the internet. I can't remember what season that was. It was in 2014, I think. So maybe like season 6 or 5 or something. And they released basically all the episodes. So they scooped up 1.5 terabytes in data, and then last summer of the year, HBO announced that it had been hacked. Terabytes of data stolen included closely held unaired episodes of Game of Thrones. 2017, Iranian Behzad Mezri was indicted by the U.S. authorities for the Game of Thrones affair. Mr. Mezri has been directly linked to the HBO hacks, though his ties to the Iranian government remain loose at best. So rumors he might have been a part of the Revolutionary Guard. The indictment accused Mr. Mezri of taking part in the Turk Black Hat Security Division of the Iranian military, which had special emphasis on cyber attacking Israel. So he is wanted now, and I guess they haven't caught him yet or anything like that, but apparently there's a wanted by the FBI, Behzad Mezri, for basically hacking HBO and getting Game of Thrones. Congratulations. And then I think they wanted like they wanted Bitcoin for the return of all of their proprietary information, So nothing too crazy about that, but I just wanted to bring that to you guys because it was on Bitcoin news, and it is what it is. So if you guys know Bizarre Mesri, maybe you can get yourself a reward or something for being a rat. I don't know. So ICOs are keeping more of the pie to themselves, with diminishing returns, increased demand, and pre-sales muscling out public sales. Profiting from ICOs in 2018 is a tall order. Just to add to investors' woes, the percentage of tokens allocated for public sales also on the decline. On average, ICOs now keep more of the pie to themselves and dole out increasingly slender pieces to the public. So before I get into this one, just know that a lot of ICOs do keep some of the coins for themselves. Usually it's 10%. And I don't see anything wrong with that, to be totally honest, because to make an ICO, to make a product, to make a company with crypto is a lot of work. It's not easy making a good crypto. Take a drink here. And the company deserves its money for doing that. There's nothing wrong with that. But apparently it's getting much higher. I say 10% is a pretty good bet, maybe 15 tops, but 10% is good. So Dfinity, an ICO to create decentralized world cloud computer, came in for flack this week after details of the public sale were revealed. It was reportedly seeking to raise $350 million from the public in return for 10% of the tokens. This would effectively value the company, which has yet to create a working product, at $3.5 billion, and I think they mean 3.5 million. I don't know where they got 3.5 billion. Maybe I'm just terrible at math there, but 10% of that would not be okay. Whatever. To add insult to injury, the public would be paying 200 times the rate that Dfinity had charged their friends and family for tokens during this private sale round. And Dfinity has promised to release an official statement on the matter, presumably in a bid to justify its valuation and keep discounting. If these figures are confirmed to be accurate, they represent an extreme case, but are indicative of a more gradual trend. ICOs are selling less tokens to the public and keeping more to themselves and their advisors. News.Bitcoin has tracked average public token allocations since 2017 and found that this figure has dropped steadily since November. In February, the public received just 43% of all the tokens issued on average, down from 55% in November. So less pie for the people. When the concept of the initial coin offering was born, the notion was that the bulk of the tokens would be sold to the public, and the project team would keep a small percentage to themselves to cover their wages for the next couple of years while they set about building the platform. And then last year, some crowd sales started keeping an additional portion of tokens to incentivize DAPP and development, or as a fund for onboarding new users. Instead of those costs coming out of the money raised by the crowd, they are now being counted as a separate deductible, leaving less tokens for the public. So this article just goes to show that when you invest into an ICO, just make sure that you do your research, do a lot of things. Make sure that you always see a development team. Make sure that the development team isn't taking too many of the coins for themselves. 10% is a good number. Maybe a little bit less or more, somewhere around there. That's fine. But when you're looking at like 20% to the development team, that's getting a little ridiculous. But again, it depends on what project they are doing. And, so it's not crazy to see a white paper and see that 10% was allocated to the development team. Well, they need to be paid. I mean, they need to be paid for making a working platform or project for you. And sometimes these ICOs raise millions of dollars, and so 10% of millions and millions of dollars could be, potentially millions of dollars itself. And that's fine, because they usually use that to hire more people, to make a website, to make some kind of platform, to code, some program or software. So that's fine. But just watch what you're doing when you're, investing into an ICO. You gotta reload those. So again, this is another one. Monthly web traffic for major Bitcoin exchanges falls by half. The disappointing price performances of the cryptocurrency markets in January and February have apparently driven many Bitcoin traders to avoid checking on their exchange accounts. Estimations of the total number of visits to the trading venues based on web traffic show a sharp decline month over month. So the total number of visits at the website of major Bitcoin and cryptocurrency exchanges has crashed in February. Generally speaking, looking across over a dozen top exchanges, web traffic seems to have peaked in December or January and fallen off by half in February, reaching a similar or lower number of visits to that of November for 2017 for each website. So according to market intelligence, the total number of visits at Coinbase was down by 49%. Kraken saw a decline of 56%. Binance saw a drop of 54%, and Bitfinex down by 48%. So quite down, and that's just really due to, price. The obvious factor that could have caused this sharp fall in number of declines to Bitcoin and cryptocurrency exchanges is the weak price performance of all major cryptocurrencies in the first 2 months of 2018. In addition to that, the massive price rally of 2017 probably brought in a record number of new investors to the ecosystem, setting a very high bar that the following months failed to measure up. The web traffic data also seems to corroborate the assumption that the similar sharp drop in the number of Bitcoin transactions is due to less usage and adoption, rather than just exchange batching hiding the total figure. So, with the price going down, people are losing interest, and that just goes to show that people that lose interest, why not? Just if they need to go, they need to go. But they're going to FOMO back in when they sell for half of what they bought. Here's another article. Hackers have shut down key computer systems in the U.S. city of Atlanta, Georgia, and are demanding $51,000 in Bitcoin to re-enable the affected systems, Fortune reports. $51,000? Come on, you can get. I mean, why even bother, right? I mean, you can make $51,000 in Bitcoin some other way. If you're a hacker, right? If you're so good at computer science that you can hack major government systems in the city of Atlanta, you can make more than $51,000, right? I mean, a good computer science, a good programmer or something like that could make well over $100,000 a year at a regular job. Or you could just be a freelance and make applications for somebody or anything. 51,000? Get out of here with that low number. So Atlanta's mayor, Keisha Lance Bottoms, announced the attack in a press conference on Thursday, March 22nd. She told members of the press that officials don't know the extent or if anyone's personal data or bank accounts will be compromised. All of us are subject to this attack. So the attack was first discovered at 5 a.m. on March 22nd. The city of Atlanta noted that the outages were affecting systems some customers used to pay bills and access court-related information. City officials are reportedly working with the FBI, the U.S. Department of Homeland Security, and Microsoft to ascertain the extent of the breach and how to resolve it. So city officials, citizens to monitor their personal information and accounts if they believe personal information could be compromised in the hack. So, yeah, so the demand ransom would cost approximately 6 Bitcoin, which is not much, but again, that just makes no sense to me. Not that I'm advocating hacking people for millions in Bitcoin or something like that, but 51,000, that's, I mean, if you go to jail for that and you only made 51,000 or only demanded 51,000, that's like Austin Powers, $1 million, like $1 million isn't a lot of money these days. Why don't we ask for more money? If you're that good at computer science, get yourself a job. Get yourself a job doing something better. And you can make literally more than $51,000. Why not just contact, people to make cryptocurrencies? Why not just make your own cryptocurrency and sell it as an ICO? Or whatever. It just makes no sense. Here's an interesting article. So Quebec pushes hydropower utility to halt new Bitcoin mines. The Canadian province of Quebec has temporarily put a halt to the development of new cryptocurrency mining operations. So just a couple months ago, if you watch my channel, you may know that I was already talking about some news articles that the province of Quebec has a lot of electricity, and they were enticing Bitcoin miners and Bitcoin mining operations to come into the province to sell some of its cheap power. So the region, known for its cheap hydropower, has been an attractive destination for cryptocurrency miners looking to expand their business. Yet on Friday, Canadian newspaper Les Affaires, I'm terrible at French, reported the operators tied to utility firm Hydro-Quebec are turning down new clients, in part due to the demands placed on the hydroelectric dam by existing operations. So, go figure. Cryptocurrency takes a lot of electricity. Guess you guys didn't estimate that one very well. Quebec's Minister of Energy and Natural Resources, Pierre Moreau, I just got to make that sound French, said cryptocurrency, I'm not making fun of anything, I'm just saying, said cryptocurrency mines require a lot of energy, but only generates a small number of jobs when compared to other factories, such as those who refine aluminum. Again, you guys didn't, you guys didn't look into that one very well, huh? You know, they were like, yeah, come take our electricity, you know, pay for our electricity, come, you know, set up your mining operations. And then that's it. They didn't do anything. They didn't realize that it only, you know, a mining operation can be run by maybe a few people. I mean, maybe, hell, I mean, one person could do it. I mean, it'd be a lot of work, but one person can run a mining operation. Or even just a few, like full-time basis. But I guess you guys didn't look into that one too well. I'm not even going to read the rest of the article. Apparently, they just, they didn't do their homework, let's say. So, once again, the evil IRS reminds U.S. taxpayers to report your crypto earnings. Report your crypto earnings, people, because I'm sure that's going to happen. Baby screaming. The Internal Revenue Service has reminded U.S. taxpayers to include any cryptocurrency income on their annual tax reforms. I'll get right on that. I'll get right on that, IRS. In a release published Friday, the IRS noted that cryptocurrency transactions are taxable like other forms of property. Oh, are they? Echoing a release issued in 2014 outlining how cryptocurrencies would be taxed. So if they really want to tax it that bad, why don't they just have like Coinbase auto tax when you're buying on it? If you're a U.S. citizen, I don't know. At the time, the IRS said profits and losses on digital currency would be treated as capital gains, with the currency being used as a capital asset. Similarly, wages paid to employees in crypto are taxable. Oh, are they? While crypto payments made to independent contractors and service providers are reported through Form 1099. So, again, with the IRS, I dare you to try to pay your taxes. And I'm not saying, like, don't pay your taxes, right? I'm not going to advocate that, like, on YouTube. But I'm going to be sarcastic about it and go, yeah, I'll get right on that. Because that's just sarcasm, and maybe I meant the truth. Maybe I meant that I really will get on that. You don't know. But what I am saying is that it's borderline impossible. If you go onto the IRS website, they want you to track every single little move you have ever made. Whether you transferred cryptocurrency, you switched like Bitcoin to Litecoin or Litecoin to Bitcoin, that's taxable. Whether you've just bought it, whether you had short-term gains or long-term gains, whether you had short-term losses or long-term losses, every single move you've ever made has to be basically written down on paper. And I'd be willing to bet yeah, like 95% of people never did that. So a payment made using virtual currency is subject to information reporting to the same extent as any other payment made in property. Notably, the release once again explains the IRS classifies cryptocurrency as property. It continued, taxpayers who do not properly report the tax income or income tax consequences of virtual currency transactions can be audited for those transactions and, when appropriate, can be liable for penalties and interest. These penalties can include criminal prosecution in more extreme situations. So probably if you like made $1 billion and then, you know, like didn't pay for it for like 10 years, according to the warning, or like you did some kind of serious money laundering with it, I don't know. According to the warning, tax evasion is listed as one possible criminal charge, and if convicted, a user could be jailed for up to 5 years and face a $250,000 fine, which I doubt will ever happen. Because even the people like at Enron and other corporations in the 2008 crisis, only one person ever went to jail for that, for the 2008 one. And then everybody else just gets away with either paying a fine or their lawyers weasel some way. There's just no way. Similarly, any users who file a false tax return could serve up to 3 years in jail. Nope, I doubt that. And pay an identical $250,000 fine. The tax agency also noted some taxpayers may be tempted to hide taxable income from the IRS. So again, you know, it's borderline impossible anyway. It's you know, if you're gonna pay your crypto taxes, I would get a CPA or go to, you know, like an H&R Block kind of place. Like, you're gonna need somebody who really knows their stuff, because this is so confusing in terms of the taxing. Like trust me, I'm a grown man. Like, I've paid my taxes, you know, like I know how to file my tax returns, you know, but in terms of like once it starts to become business level or crypto and investment level, it'll blow your mind. Especially with crypto, because what it's defined as and what did you do, like, you know, this is all new. So you switched from Litecoin to Bitcoin and you make a few bucks doing that. That's taxable in some way. So again, do your best, I suppose. But you know, if you made like $1 million in crypto, yeah, you should probably get on that. You should probably have an accountant anyway. If you're making $1 million, you have an accountant anyway, right? But if you just made like $1,000 or like a few $100s last year in crypto, you're probably not even on the radar to even actually have to pay taxes. You know, and don't take that as like professional advice, because this is just all speculation from somebody who doesn't really know their ass from a hole in the ground in terms of taxes. Because I know that, you know, if you just go to work and let's say you pick up a Mick job and you work at McDonald's or something like that for 3 months and you make like $3,000, right? For the whole year. That's all you did for the whole year. Trust me, it happens with people, I guess. I don't even think you have to file your taxes. Yes, you should, because you deserve your taxes back. But there's like a like $9,000 in the United States anyway, before you're even required to send the information in. Otherwise, it's just not even a bother. However, you did pay taxes during that time because you filled out W-4s, and so that means that, you know, you did pay some taxes from that $3,000, and likely you're going to get almost every bit of that tax that you just paid in those 3 months that you worked, because you're under that $8,000 or $9,000. I don't know what it is. But anyway, I hope you guys enjoyed this video, and I hope you guys enjoyed the news. And as usual, I will see you guys next time.